So right now it's about 11:51. This is the 5th of the 7th month, 2003. And yeah, yesterday we were looking at US 100. And now with the US 100, it's just that it was 4th of July. So it was a holiday basically in America. So most of American pairs were moving very slow by that time. But you can see that I have a trigger right now, USD CAD crossing. It actually triggered about an hour ago. Yeah, just that I was in the gym at that time. So it triggered about an hour ago. So like I said, this thing is very helpful, guys. Like, trust me. So we actually caught a buy from yesterday, and I was looking for the TP to actually be around this point. So we hit about the second TP, but I already took my profits around the first one. So right now it's actually at, because right now I was trading this based on supply and demand, and you can see that the supply has met the demand. And then, so I was looking to actually revert and sell it on this point, but it actually hasn't left me yet. It's still an opportunity to go in. I feel like this order block hasn't been yet properly mitigated in order for me to jump in. I just see a huge rejection and a small retracement. So it could be coming to also mitigate the order block properly on this end. And then we've been getting major rejections on this level. We have about one, two, we have about three, four rejections on this side. But as you can see, it was kind of a IPA, impulsive price action movement to the higher side. But you can see that they left the liquidity down here from where we took our bullish trade. So there's still some liquidity there. And if the market respects this supply and demand, we will be looking to take another short coming down. So it's about USD CAD. I mean, both the USD and the CAD markets are closed. So this was pure technical work. At this point, we have the 1, 2, 3 touches. Then we have the expansion to the upside. So when we see markets like this, we're not seeing any formation on this upside. So if we don't see any formation yet, I would advise that we don't take this trade. But I am looking to take this trade, as I'll be scalping on the 5-minute. As you can see, the hour chart has gone up to our demand here, has gone up to our demand. And then we're getting an hourly rejection. It will be best to wait for the next hour to open, which will be in about the next 6 minutes. So in the next 6 minutes, we'll see how that candle reacts. So if it closes like this, honestly, I'll be looking for the next hour to come retest the wick, and then get our sniper entries here, and then the market comes down. So if it's a situation where this candle actually closes bullish, then the market is still looking to collect some orders, hasn't found some sufficient orders in order for it to move. So in this point, we'll just have to wait for this candle to close. Yeah, and this is also moving smoothly. Yeah, as you can see, but I still wanted to return. I still wanted to return because I actually missed this entry here. I was supposed to get it. I actually missed it. I'm not gonna lie, but I still see this as a very valid order block, to be honest. I see this as a very valid order block. Looking for it to just touch the trend, retrace again, because the major thing is breaking this trend and coming to collect the liquidity on this level. So you can see that there's so much liquidity on this level, and we see where the trend line is lying. So our major objective is to break this trend line, If anything, if the market does come down, maybe invalidates this order block, that means that it will be breaking this structure here. So you can see there's a validated structure, and then we'll break in this structure, and then we'll get our movement here. So that's why it will be wise just to stretch your stop loss a little bit below this order block here. So in case it does invalidate that, break the structure and come collect here and have the market go up and collect some more liquidity here. So this trend line must be broken. So this is our objective in this market, is to have this trend line broken. So once that trend line breaks, they'll be going to collect liquidity. So I like to enter the trades before reaction happens. If I see a proper solid formation, that will be my go-to in order to execute a trade. So this one we're still also looking for. Like I said, it left, but it's going to respect this trend, come back, and then we're going to take the trade. It might also just come back to the trend line, and then that's where my first TP is going to be. If it does break and go higher, then we'll be basically very deep in profits. So there was already there's just two. So yeah, this also triggered. It's triggered about 950. Triggered at about 950. Let me just replay just so you guys can see where the trigger was. So yeah, it triggered around there, and then market left. At that time, I was not on the screens at that time, but I'm not really turned off, because what I see is that I can see liquidity being created. So this is actually the retailer side. This is the retailer side. So market is showing me that the retailers are coming in on this side. So my next move would be looking to sell it around this order block. Get a very aggressive sell. Get a very aggressive sell. And then I just have to encompass this order block on top here. So I have to encompass that order block on top. So my entry would basically be here. My entry will be around there, and just encompass that order. So this is the 5 minutes. So we really keep our stop losses tight. You really have to keep your stop losses tight if you're scalping, and make sure that you don't risk too much on the 5-minute chart, because yeah, that's an account blower right there. So we're just looking for this. We can see that. Let me just remove this. We can see that the liquidity was brought in on the downside, and then most of it was collected, and then some was brought back, and now they're bringing in more liquidity, you see, on the side. So it's basically changing characters, if you can notice that. Now the liquidity was coming on the downside. They went and collected about 80% of the liquidity. They brought back the market to correct. Once it entered this supply zone, the retailers came in, filling up the gap. So they're filling up the gap with liquidity. So this is that liquidity that we are looking to collect. And you can see that it's a very narrow and linear liquidity that they're bringing into the market. So we'll be waiting for these order blocks. So if we bring out the fib, it will indicate that exactly this is the 80% level. So 80%, as we know, is the discount. Anywhere you go around the world, if they're giving you something at discount, it's usually about 20% off. If it's anything more, it's basically a sell-off. It's what we would consider as a sell-off. So this is where our discount level is, and this is where we saw our initial reaction in for the correction of the market. So as the market goes up, we're looking for our entries around the discount, stop loss about 6 pips above from the premium. That's enough to risk. So that will be about a 2% risk. If you calculate it onto your own account and whatever your funding is or how much you funded with, just make sure that you know your lot size can encompass your stop loss to only be about 2% of your account. That's actually good risk management. So we saw that it's about 80. So we'll be looking to take shorts around here on Euro USD. So then we have USD chips. So I'm just checking on all of the pairs. You can actually go check the previous video, which was my forecast for the week. I also did a recap on one. I did that one on the 3rd of July. No, actually, sorry, the 2nd of July, where I was just looking at all the markets I'll be going in. So these are basically all of the markets that I'm currently looking at for this coming week. It's just about five, six maximum, 6 including US Tech. So that's all I'm looking for. So we still haven't gotten a trigger on our USD shift. We're still on this trend line. I'm still waiting for the collection of these orders in order for us to reach here. They're trying to fill in the gap, but trust me, they have to come collect these orders before they fill in that gap. That's why we're getting so much rejection on this level. We're getting too much rejection on this level because there's not enough orders met on the bull side in order for the market to go the direction we want it to. So, patience is the game. So let's just check our US Tech trade. As you can see, yesterday there was a lot of sideways movement. So let me just bring it to my other page. So there was a lot of movement from yesterday. When we caught this trade, it was during the holiday. So I just want to just give you guys a quick run through. Well, everything was basically spotted. So always just gotta mark the time zones. You're gonna have to adjust it to wherever you stay or whatever country you're from. But I'm using UTC +2 Johannesburg. This is why my times actually move like this. So on the group, let me actually just bring it up for you so that you can see. So on this group, I'm just trying to bring it up quickly. So it's the Monetary Innovators trading community as well. So I was basically seeing a trend coming from Asian, late Asian, leading to early London. So this is what I was seeing. So what I was seeing basically. And this was from the 3rd. This was from Monday. So this trend has been going. You can see that it's creating volume. And this is where we had our breakage once volume reached maximum capacity. Once we got the volume to reach maximum capacity. So when we see such like I love volume, guys. Like volume is the best indicator out there. Like, and you don't even need to type it in or anything. So yes, Monfrere. This is where we were at. You can see this is me posting this on Monetary Innovators, MI Trading Community, which stands for Monetary Innovators Trading Community. And you can see the timestamp on this. This was at 1611 on the 4th, which was yesterday, 1611 on the 4th. So around about when New York came into the market, I spotted the opportunity. I always look at NAS around New York. So from about 2, which usually they release news around 2:30, from 2 until about 8, 9, I'm looking at New York. And that's where basically where most of my focus is. US 100, particularly. Unit US 30, not as much, and German 30. Like this is the one indice which I trade religiously. So you can see the timestamp and the time that it was sent. So if you still remember on that previous chart, this was about late New York. So late New York, they left a high here. There was still a high, a London high, which was not taken out at that point. And then we got the market coming down. Asians opened up and they created a range. London broke through that range. There was still a trend building from when they took out the low from the day. I think this was about Tuesday. Yes, this was Tuesday. They broke this. No, I'm sorry. This is Monday. They broke that low, and then there was not enough liquidity for them to come take out that high. And then the market basically died midway. New York closed. London opened and created their support and resistance. Once their support and resistance is created, we just have to wait for London to break it. So the support and resistance was broken here. The support only. I'm sorry, I mean the resistance was broken here. But you can see that there was an order. The order was not mitigated yet. And then the market came back down, respecting the trend. So as it came up, it entered the order. You see, once it entered the order, we got a formation. So if we went on a 1-minute chart, you can actually see clearly the formation that was forming, which was a double top. So once I saw that, this was a risk as well because I couldn't stretch my stop loss above this premium, which was going to be a lot of risk. I think it was going to be about like 7% to like 8% risk if my stop loss was there. So this was actually kind of a risk that I took, but I saw the signs. There was a lot of divergence as well on the 5-minute chart, as well on the hour chart. There was a lot of divergence. So I was willing to take that risk because of all these confirmation. I'm seeing a double top. I see the orders mitigated, and it's actually a fair value gap here. And it's very hard to fill in a fair value gap. So market didn't have enough momentum to go fill in that fair value gap. So I rate the stop loss that I placed is actually good. It might be a bit more, but yeah, I was really confident on this entry. And you can see that we entered it as soon as the order block was left. So once I saw these 3 candles, it was confirmation for me. And then after there, so my first TP was at the trend line. So my TPs, first ones are always at the trend line. Hence like I scalp. So my TPs would hit quick as well, but as well, like you're not trying to be too long in a trade and then have it go against you. So I was at the trend line. If it was going to respect the trend line, I was going to be out of the market. But it came, and this was at about, you can see the timestamp, 16:45. This was roughly like 30 minutes after it already hit TP1. It was already at the trend. And I really like this momentum. This type of momentum, I really like it because it's so consistent, and it's not confused. It's momentum that's not confused. It's so consistent and it kept going. You can even see the candle formations. It was all red, my Monfrey. It was all red until it got to the trend line. So it was mitigating the trend line at that point. So I think this was around about 4. And then we left. This was our USD CAD. Sorry. So at that point, like I ended up leaving it. You can see it trailed, and then it got here, and then I slept. I didn't close these entries. I slept. Yeah, which was actually very naive on my side, to be honest, that I left trades open during the night. Yeah, but I actually wanted this TP2. It was very naive, and I shouldn't have actually done that. So it was very immature, to be honest, to leave a trade running in the night. Because in this instance, you can see the market opened on a huge gap, see, and that could have been momentum for it to go up and collect this order, you see. But as I said, my stop loss was fairly nice. It was fairly nice. So it opened up, and then, Asian did its thing, created resistance and support. Luckily, luckily the resistance was not above even my entry. So it was still good. Market came. And then I think as soon as it was 7, I think around about 7:30, we got a reaction coming down. So which means that no more holidays, markets are back at it, baby. So the market came, slammed our TP2, and yeah, it's still selling to this point, but I went out because I had about like actually I had about like four more entries here. And then yeah, I got out. As soon as I woke up, the market was here. And I was like, okay, I got out. And then yeah, but I did uh take some profits here. And then I got out. I didn't even trail this entry, to be honest. I didn't even trail this entry. I think I just passed out. It's one of those things, which is a bad habit actually, to be passing out on trades. But then yeah, our TP2 was smashed, and yeah, everything was good. And this was our USD CAD, which is here. We caught this entry right here. Same day, 4th, around about New York. This was at 5:32 UTC plus 2 Johannesburg. We caught this buy, and then you can see we entered on the retailer side, minimal retracement, and we ended up on the retailer side. Now, yeah, our target is hit and it's up there. So now I'm looking for an inverse sell on this. So those are basically the only two markets that I'm looking at for the day to come. You see, so I will be posting more and let you know more about what's gonna happen and how my entries are going. So stay tuned, and from Monetary Innovators, have a good profitable week.